If on Friday we are below the 20-day moving average and then fail to get back above that 20-day moving average, now we have potentially a better warning sign that potentially this rally, this kind of unstoppable rally that we've had, has now reached its conclusion. So here's what you need to know before the bell. So yesterday the market, again, this is that perfect trend channel that we've now been in for months. And the market trades to the top of this trend channel, which runs right along the 20-day moving average. And when we get to the top of that trend channel, we sell off and go right back to the 20-day moving average. And this has been just repeated over and over and over again for the last 5 months to a point of ad nauseum, because we've been talking about this for the last 5 months, is that this rally, very, very good, very bullish, but trading within a very defined trading range. So again, we get to the top of this trend, we sell off to the bottom of the trend right there at the 20-day moving average, and then we rally back up again. So today is going to be a test. Yesterday we came down, we exactly touched on the 20-day moving average yesterday, then rallied a little bit off of that into the close yesterday. But this morning futures are pointing lower by about 7 points. So again, this morning we're going to touch that 20-day moving average again. Now again, just, got to remember this, is that just because we potentially violate the 20-day moving average at some point, maybe not today, but just because we violate it doesn't mean immediately go out and sell everything. Because what we're going to be looking for here, let me zoom in a little bit on this. So if we look at this 20-day moving average as a function, what we're looking for here is simply the market to break this 20-day moving average, rally back to it, and then fail. And so we need a confirmed break of that 20-day moving average before you take any real action. Just because we potentially break it, and we've done it before, we've come back below it and then immediately turn right around, rip back up. So, if you sell right there on that first break, potentially the market whipsaws you, but we're looking for a weekly, for the close of the week. So on Friday, as an example, and again, I'm not saying this is going to be the case, but if on Friday we are below the 20-day moving average and then fail to get back above that 20-day moving average, now we have potentially a better warning sign that potentially this rally, this kind of unstoppable rally that we've had, has now reached its conclusion. And that will happen at some point, mind you, right? It's just a function of time until we get there. Whether or not it happens today or next week, I don't know. But again, this is what we're kind of watching for. Again, nothing to really worry about here, nothing to do at the moment, because we haven't violated this trend, and this trend remains very firm. Every time we get down these 20-day moving averages, the computers kick on, start buying stuff. It's just the algos at work. So again, this is why we continue to see this very similar action day to day, week to week here for the last 5 months. Again, that will end at some point, but we're not there yet. But again, don't knee-jerk reaction, don't make a knee-jerk reaction to the first break. You've got to let it break, let it confirm, so that you don't get whipsawed out. And this happens to traders all the time, is that, there's a break from a moving average, they go, oh my gosh, I've got to sell, and then the market goes right back up, and they go, well, see, technical analysis doesn't work. You have to understand the nuances of how technical analysis works. So again, just don't make a knee-jerk reaction. Wait for a confirmation. May lose a little bit here, 1 or 2%, before we have a good, strong confirmation that this rally is over and it's time to take more aggressively defensive actions in your portfolio. Okay, so that's what you need to know before the bell this morning.